What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and good God, what an awful day. We're going to be talking about why the stock market is selling off today, but we also have earnings as well, and that's why most of you are here. We have earnings with Square, aka Block, or Block, aka Square, that are coming. That are this afternoon. We have Cloudflare, DoorDash, Fubo, Lucid, Zillow, Virgin Galactic, among many others. And let's not forget as well that I'm going to be doing my over-under segment. So make sure that you're putting overvalued or undervalued in the chat. You can also do over-under and then your ticker. Would love to hear from you guys, and we'll cover those as well as to whether or not I think your stock is undervalued or overvalued at the end of the show. So make sure you're putting those in the chat, and you just might show up in the stream. Speaking of showing up in the stream, let's go ahead and net everybody up with the starting five. We got Jonathan Schreiber, Jeff Chocolate, Jeff Ponica, Mike Hudson, and Gabe. You guys are our starting five. Thanks so much for showing up early. If you missed the starting five, guys, make sure that you hit that notification bell and the subscribe button to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday, to cover earnings and whatever else is going on in the goddamn market. Holy shit, guys. It is Thursday, May 5th. We have no Freddie, so there's not even comedic relief today, unfortunately. It's just like bad all around. Freddie's out. He's still got work things going on. It's been really busy, so he'll be back next week, hopefully. But shout out to Freddie if he's watching. So the market right now is in absolute disarray. We got right now the Dow's down 1,352 points. It is the bottom or the low of the day, along with the S&P 500 that's down 4.5 points. We have the NASDAQ that's down 5.5. We're pretty much damn near circuit breaker territory. And I mean, with only 13 minutes left in the day, I doubt we see that. But what a god-awful day. You know, yesterday you could have made the argument that the market was overreacting to Jerome Powell's remarks regarding the 75-point rate increase or lack thereof that he announced or he answered a question from CNBC's own Steve Leisman about whether or not they were going to increase rates by 75 points at any point. And Jerome Powell came out and said, no, we don't have that in the cards as of right now. Of course, he's not ruling out anything, and he never does, one way or the other. And the market reacted, right? The Dow shot up 1,000 points in the matter of an hour. The S&P was up 3.5%. So, and the S&P, I believe, was up 4 and some change. And now we're kind of over. I think you can make the argument, though, that the market overreacted then. And I think it's overreacting to this side as well. You know, there was some, well, how do I put this? Unnerving numbers that came out as far as production is concerned. So we had production numbers that came out this morning that were lower than expected, while wages were actually going up. Wages were up around 11% for the month of April. And that, ladies and gentlemen, could be a recipe for stagflation, which is kind of sending the markets in disarray. Do I think that we are going to see some stagflation? I don't think so. I mean, we're seeing reactions now that we haven't seen ever. The S&P is on its worst start from January to now since 1945. That is unbelievable. And you know, obviously we're in a bear market. Let's not beat around the bush with that. But you look at just how strong the economy is right now, and some of the earnings numbers that we're seeing. I mean, the majority of companies that are coming in that are actually beating earnings and actually giving upbeat guidance. Now, there has been some terrible ones out there, but that's with every earnings season. I think for the large majority, though, it seems as if the economy is doing just fine. There's still $2 trillion of consumer of cash sitting on the sideline as far as the consumer is concerned. We have companies that have another, the number just escaped me, but they still have a shit ton of cash sitting on the sidelines. And so we're seeing massive buybacks, $70 billion buyback from Alphabet, a $90 billion buyback from Apple. I mean, I just don't think that we're going to see a situation in where we're living in this for too much longer. It's one of those situations in which it's so bad that it's good. And I think that there's going to be a situation in which we could really see a sharp turnaround. Do I think that we're in a market in which, you know, is as bad as it was in 2008? No, consumer sentiment is down that far though, and I think there's just too much fear. It's going to be rough, and I put this out in our watch list this morning for our chaos crew. That I didn't think that we were out of the woods. We got to see the numbers from non-farm payrolls that'll be coming out tomorrow, and then we also have CPI coming in behind that next week. That'll be reported on Wednesday before the market opens, and so we could see maybe a potential turnaround. If the numbers tomorrow are good, if CPI indicates that we're seeing inflation continuing to come down on the back of March numbers as well, then I think that we could start to see a little bit of a sigh of relief. I'm not saying, again, that we would be even out of the woods then, but it certainly would provide some encouragement. And I think a lot of people that are in fear of a recession or stagflation maybe could have those fears eased a little bit. We can start working our way back in. But right now, this just seems like it feels like capitulation. I'm not saying that it is. It's too early to make that call, but it certainly feels like it when the NASDAQ right now is down 5%. Let's take a look at the chart here. Here's the triple Qs. And you can see this is the daily chart on the Qs. We're literally at bottom right now that we just tested. And actually, we did hit a low today that was below Monday's move as well on the Qs. This is the NASDAQ 100. You look at the SPY right now, also testing the bottom here that we on lows that we hadn't seen since February of this year. So pretty tough stuff all around. And then you have to ask yourself, do I put some money to work here? And I think that some people, I guess, have been asking me today that, what do I do with my money? Do I sell? Today, ladies and gentlemen, is the absolute worst day to sell anything. Yesterday, you could have had an opportunity to maybe take some profits out if you had any to take out, or take advantage of a potential rally to maybe buy back in today. But I think today is the absolute worst day to sell. Days like this where you see just an absolute flush, don't get scared out of the market. I mean, and I'm not a financial advisor, so you can't just take my word for it, I guess, because I don't have certain numbers or letters behind my name. But, I think just common sense tells you, like, this is just not a really good day to sell. I mean, what are you going to do? And if you have cash on the sidelines, obviously inflation is also devaluing that cash. So in my opinion, you still got to put it to work. The only place to really park your money right now is in stocks. And it has to be the right ones. And it has to be good quality companies. And I've talked about this. I mean, we looked at Microsoft, Apple, and some of the other good quality names that are bringing in money and bringing in cash, positive cash flow. Those are going to be the stocks that are going to continue to do well despite what's going on in the market today. Those are going to be fine. The ones that aren't going to recover as well, they're going to be the ones that are continuing to report losses as interest rates go up. I mean, we're seeing the Treasury go absolutely nuts, which I think is way ahead of itself. And we're seeing it go way too far in one direction. So if that cools off, then we will see equities go up. So that's also something to consider. I mean, we saw the 10-year today go well above 3%, which is a number we hadn't seen since 2018. And that just, I mean, and the speed in which that's gone up has been absolutely mind-blowing to me. I've just never seen the Treasury be this volatile. And I mean, I wasn't trading in 2008, so I can't really tell you exactly how things were going then. Environment's a little bit different here. We weren't talking about inflation in 2008, not like this. And so I don't know. I just think that right now there's a lot of emotional trading going on. And so I'm still going to be the beacon here and say, hey, I remain bullish on 2022. And I think that we could actually still potentially end the year in the green, despite the fact that the S&P is down 14% today. What does that mean? I think that the S&P could potentially see anywhere. And I said this is one of my bold predictions for December. So if I made this bold prediction in December, then that tells you everything you need to know about how I felt about this year coming into 2022. I had said that it was going to be a bold prediction to say that the S&P was going to come in at 9 to 10% in the green by the end of 2022. I think that that's still very much achievable. We have a lot of time left in the year. We have 7 months to go. And I think that once we get through a lot of this treacherous movement, some of this volatility, that we could see things kind of turn around. And again, we're seeing good pockets of money being spent. Consumers are out there still spending money, which means more money to the bottom line. Obviously, we have inflation to deal with, which is certainly going to impact a lot of things. But I still remain positive in the market. The economy is super strong. And I think while there are things to be concerned about, I don't think that it is a good reason to just be completely out of the market. So with that being said, we got about 5 minutes left to go before earnings. And just a friendly reminder, you guys heard me talking about our Chaos Crew folks. If you go to the join button next to subscribe, each and every morning I put out a newsletter, I guess you want to call it a newsletter, but it's a watch list. Essentially, I give a nice macro perspective on what I think is moving in the market, but then I also give you 5 stocks that I think are worth watching that day and perhaps beyond. I give a good fundamental analysis as well as a technical breakdown of each one of those stocks. Put a lot of work into that, but it only costs you around only costs you exactly $4.99 a month. It's super cheap to use, really no risk to you in general, but I try to provide as much value as I can for that. And it just helps support the channel and everything you see behind you, keeps things going. So if you want to support the channel and be a part of a great community, make sure you hit the join button next to subscribe, or go to ownthechaos.com. Those links are in the description as well. Would love to have you guys as a part of the crew. So make sure you hit that up. All right, so we got, let's see here, about 100 of you guys hanging in here with 26 likes. Let's see if we can get those thumbs up as we anticipate earnings today. So while the market is absolutely in the shitter, we still have earnings, guys. We're still in the thick of earnings season. So we got some really interesting ones. Make sure you're also putting your over-under stocks in the chat as well. We started a new segment. It's overvalued, undervalued. I shortened it up to over-under. Make sure you're putting over-under and the ticker in the chat, so that at the end of the show, I can scroll through and cover the ones that are in there. So make sure you're putting the over-under stocks in the chat as well. And let's get on with it. So we have Square, a.k.a. Block. They are reporting today after hours. The stock's down right now 11%. This might be a good opportunity, guys, as the bar could be set low. Now, fundamentally, from a multiple standpoint, Block is still pretty overvalued. I believe it's trading at, and actually I can tell you, Square trading at 76 times next year's earnings. So while this has come down considerably, 60% plus, it's still trading at a pretty high multiple. The expected earnings per share is at around 21 cents. Estimated revenues at 4.16 billion. And we'll put the ticker up for those as well as I'm covering these. Let's switch up the ticker here. There you go. There's your earnings numbers as I'm running through these. Cloudflare is also reporting earnings. They have a loss of, or they're reporting estimated earnings of $0. So $0.0 on estimated earnings. $205 million in revenue is the expectation there. We have DoorDash with an expected loss of 41 cents. Average estimated revenue is at 1.38 billion. Then there's Fubo TV, a loss of 65 cents. $242 million. Well, we'll call it 243. $242.98 million is the estimated revenue there. Then we have Lucid Motors, which is pretty highly anticipated, a loss of 30 cents. Average revenue there is expected to be around 53.43 million. I think that's kind of high. $53 million in revenue seems high to me. So we'll see if they can come in above that number. We also have Zillow. Estimated revenues or estimated earnings per share is at 26 cents, 3.4 billion in revenue there. And then we also have Virgin Galactic at a loss of 32 cents and a whopping $120,000 in revenue. Wow. That'll be one to blow everybody away, I'm sure, with that 120K in revenue. Now, there's a ton of other earnings that are going to be reporting today, guys. So make sure you throw them in the chat. Hopefully I'll see them. You know, again, still a one-man band here with no Fat Man Zoom. I need to get on. I need to hire a designated person that can throw some more earnings out, because there is a shit ton. I mentioned the most anticipated ones, the ones that I think that most of you guys are here for, but we also have Open Door, Corsair, McKesson. Live Nation is also one that I think is certainly important to watch. Luminar, Redfin. I mean, there's a lot today. GoPro, Dropbox, Billy.com, Yelp, lots of other smaller ones, but there's a ton of earnings. Norton LifeLock. These are all SunPower as well. Gosh, there's so many earnings that are going to be reporting today. So it's going to be a busy, jam-packed day as we're coming into the close. We got about 30 seconds before the market closes. So it's going to be very hectic. This doesn't mean that I'm not going to be covering the stock that you're looking for, guys. So just keep that in mind as you're seeing maybe your favorite stock go off or start to move in the after hours. I will get to it. It's just I might not get to it exactly when you're seeing it, but I do see you guys in the chat. So yeah. Let me know what what are you looking forward to the most? Now today, earlier this morning, Crocs reported earnings, and they were actually good. I think this is actually a decent opportunity to look at Crocs. It's down now 9%. News came out this morning. Spending here in this space is still pretty good. If I looked at the earnings here, it's trading at 6.5 times next year's earnings. That's still really cheap. And I said it was cheap yesterday. I had it on over under yesterday, and it's still cheap. And it's even cheaper today. So I think that when we look at when companies and institutions and even retail investors are looking at stocks and they're concerned about multiples in this environment, this is one that is well below the S&P multiple, which is sitting around 19 times next year's earnings. So this to me is still really cheap. Crocs is one that I think has a really solid opportunity to potentially buy the dip on. The other one, Shopify. I see a lot of people asking about Shopify for the over under. So we'll cover Shopify later in the over under segment. So be patient with me on that. Now, let's check in and see how some of the stocks are moving as the market is officially closed. Lucid right now, no movement from them just yet. Let's take a look at Zillow. I think Zillow might be moving. It's up 1.25 here after hours. Virgin Galactic, it's up a little bit after hours too, but not much. Cloudflare also reporting here after hours. Not much going on there. Check out DoorDash. Moving. So still early. The market just closed. As soon as we start to see some movement on some of these, I'll certainly be bringing those to you guys. Let's check out a couple other ones. Open Door. No movement on that one yet either. Fubo. Slightly in the red, but not a whole lot of action. Man, it's like feast or famine out here. What was it? One day earlier this week, literally all of them reported at the same time as soon as the market closed. And now it's kind of like, I have a feeling this is going to happen to me again, where we're just going to see them all get released at the same time. But no movement so far on some of the ones that I've mentioned just yet. Let's check back in with Square. How good friends at Nikola jumped today. What a crazy day. Yeah. Didn't they report earnings? Yeah, that was up 6% on a shitty day in the overall market. You know what else actually had a decent day was Booking. Booking actually held its gains pretty well, all things considered. They had a monster quarter right along there with Airbnb, although Airbnb reacted, with the rest of the market. Booking actually held its own. It was up as much as around 6-7%. Still closed the day in the green at up 3.25. I think, the travel stocks are still ones to own. Booking's definitely up there as we're waiting for some of these earnings to roll in. All right, let's take a look. I recirculate here. Net is now up. Cloudflare is now up 2%. Let's see if I can pull that up, see if we have any earnings numbers on Cloudflare. Might start to see some movement. Here we go. Nope, I thought I had it. I do not. No earnings out on them just yet. Corsair, here we go. Let's check out this one. Corsair came out. Thanks, Raylan. Raylan, you're hired. Stocks down 1.5% after already being down on the day 7%. They came in and missed earnings. They came in at 9 cents versus the 19-cent estimate. Sales came in at $380.7 million. They missed a $408 million estimate. This doesn't come as much of a surprise to me. This is one of those good pandemic plays that did really well, just like Logitech, right? Logitech did really well during the pandemic because everybody was home playing video games or doing work at home, and Corsair and Logitech did extremely well. Since then, though, it's slowed down a lot. People have gone back to work. There is this hybrid environment, so it's not necessarily like everybody's working at home 100% of the time anymore. So that demand has certainly waned a bit. So this isn't much of a surprise to me to see that Corsair has missed earnings. That's your daily chart. Let's go back to the 5-minute and just kind of see how this is reacting. I mean, it's only down 1.5% after having a really shitty day, along with the rest of the market. It's down 7% right now. So we'll see where this goes. I mean, I don't know what their guidance is just yet. It's still a little bit early to make that call. As soon as I find that, I'll certainly pass that along. But there's not much really. Not much further. I think this could come down. I mean, they're a profitable company. They'll be fine. Growth just a little bit slow. Forward earnings, forward PE, sorry, is at 10.88. So it is on the cheaper side, despite the lack of growth there. Okay. Check in with a couple other ones. Check back in with Cloudflare. Not a whole lot of movement there. DoorDash. Ooh, DoorDash is up 9.5%. All right, here we go. Now we got something. Okay. So as I had mentioned earlier, DoorDash had estimated earnings of a loss of 41 cents. $1.38 billion was the estimated revenue. And I'm looking for these earnings numbers now. Stock is absolutely ripping now. Here we go. Now up 12% after hours. Stock was down 10% on the day. And now just came right back. Let's see here. No immediate earnings numbers that I'm seeing yet. Interesting. We've talked about Lucid, Chris, but we haven't, I see Chris JC asking about Lucid. We haven't earnings are probably just coming out. I'll cover those in just a second. I'm looking at DoorDash right now. Stock is now up 8% after hours. Looks like they missed by 10 cents on earnings per share, but they beat on revenue. It looks like their guidance is actually pretty good too. Let's see here. I don't have the official numbers just yet. As soon as I have them, you will have them. Look at this. That stock is bumping right now. Yeah, it looks like revenue beat estimates. So earnings per share, a loss of 48 cents. That's 7 cents worse than analyst estimates of 41 cents, as I had mentioned earlier. Revenue for the quarter came in at 1.46 billion versus consensus at 137. So this is actually a beat on revenue. Stock is starting to give back some of those gains. It was up as much as 12% after hours and now only up around 7 1/3. So we'll continue to watch that one. Let's check in on Lucid. I see you got a lot of you guys asking about Lucid. Right now, the stock is not really reacting all that much. It's down around 0.5% after being down on the day around 7%. Let's see what we got. So a couple interesting numbers from them. Looks like they came in for a loss of 5 cents. They beat the loss of 29-cent estimate. So that's actually an interesting beat. They also beat on revenue. I had mentioned earlier that I thought that the revenue numbers were going to be tough to beat. 57 million in revenue. They came in and beat by around 2.14 million on the estimate. So their estimated earnings per share their estimated revenue, was at 53.43. It looks like their revenue came in at 57.7. So pretty decent beat there. They affirmed their fiscal 2022 production to 12 to 14K units. So still nothing anywhere close to any of its competitors, but it's still within the range that they set for themselves. Let's see here. So they're just reiterating, no raises or anything like that. They mentioned that strong demand with more than 30,000 customer reservations as of today, reflecting potential sales of around 2.9 billion. That would be if they actually fulfilled all 30,000 of those orders. That's still a very small number to me. That's still fairly small. I mean, it's a great product so far. I'm not saying that you shouldn't own Lucid, or I'm telling you to avoid it, but just just consider the competition that they're up against. I would imagine that Lucid gets bought out at some point. But anyways, those are your Lucid numbers. Um, Stock's not really reacting all that much. It's been back and forth. It was down 0.25%. Now it's up around 0.2. So not really too much of a reaction from Lucid, but those are your numbers. We'll come back to that to see if there's any other further reaction. CR Corsair reported earnings, and that stock's starting to claw its way back after missing. That's now green after hours. DoorDash came in and missed on earnings per share, but beat pretty handily on revenue. I would imagine the guidance there is actually pretty darn good. So they came in for a loss of 48 cents. The expectation was a loss of 41. They came in at 1.46 billion, beat the 1.37 billion estimate on revenue. Stock's now up around 6.75%. Pretty good stuff there. Let's check out some of the other ones. We got Fubo. That stock's now down around 1.5%. Just bear with me, guys. I'm sure there's a lot that's moving out there, but there are so many stocks right now that are reporting earnings here after hours. So I'm going to have to go through them one by one. I promise I'll get to yours. But Fubo came in with earnings. They came in with revenue of 236.7 million. The estimate was 238, so a miss on revenue. They also missed badly on earnings per share, a loss of 89 cents versus a loss of 63 cent estimate. So a pretty big miss there for Fubo TV. This doesn't really come as much of a surprise to me because of the way we've been hearing from some of the other streaming services, such as Paramount, Netflix, and others. And Fubo comes in and kind of falls in line with those, missing on revenue and then missing on earnings per share. Stocks only down around 2%, but that's after it was already down 10% for the day. So perhaps this might be as worse as it gets, but we'll see. Stock, I can't believe that we're looking at Fubo came down to a low of 368 after seeing that this stock was in the $60 range. Wasn't this up? Yeah, 62.29 was the all-time high that we saw on Fubo back on December of 2020. And the stock is now trading at $4.12. I mean, my God, what an unbelievable fall from grace for Fubo TV. Let's go back to the 5-minute and see how this is doing. It's down 3% now, so it looks like the selling's starting to increase a little bit. But there's your Fubo TV numbers. Checking out a couple other ones that are reporting today. We have Zillow. That's now down 4.5% and continuing to accelerate here. So Zillow, as you guys know, has been in the doghouse for quite a bit. Their estimated earnings per share were 26 cents, $3.4 billion in revenue. Looking up those earnings numbers right now to see if I can find what I can find. It looks as if they maybe beat on revenue, $4.26 billion versus the $3.4 billion estimate. Looking for earnings per share. Looks as if perhaps they're not the guidance is potentially disappointing. So it's down 5.25% right now after hours, after already being down 10% on the day. It's down another 5%. So they came in and beat earnings per share. They actually gave poor guidance. It looks like $124 to $174 million in guidance, and that's below expectations. Interesting. Net loss of 72 million. Oh no, so this is Redfin also was reporting. Hold on, I have Redfin numbers here as well. Redfin is up 3.8%. They looks like the guidance they came in below, which is interesting. Let's see what I can find on Redfin. They came in revenue 597.3 million versus the 550 expected, a loss of 86 cents versus a loss of $1.09. So they beat on top and bottom line. They beat on earnings per share. Pretty solid quarter from them, but then they ended up coming in and providing lower than expected guidance, yet the stock is still up. It's up around 5%. So keep an eye on that. I'm not so sure that Redfin's gains here last too much longer. We'll see. Maybe the CEO comes in on their conference call and gives a little bit more of an upbeat guidance compared to what the report is saying. But those guidance numbers looks like they're missing expectations. We'll keep an eye on that one. So Virgin Galactic also was reporting earnings. Let's see if there's any movement on that. Not too much of anything. Let's see. Virgin Galactic doesn't look like there's any earnings numbers on that just yet. Oh, nope. I lied. Earnings are out for Virgin Galactic. Looks like the earnings per share 36 cents, a loss of 36 cents, I believe. Loss of 36 cents versus a loss of 32. Revenue came in at 319K. Woo! 319,000 for Virgin Galactic versus 120K that was expected. So it's slightly in the green here. Virgin Galactic came in and missed on earnings, but beat on revenue. We'll see if that moves at all. But interesting there for SPCE. Open Door. Raylion's got those numbers. So up 13.5% right now is Open Door. Wow, what a move here. So here's a nice little mover here after hours. Estimated earnings per share of 4 cents. They beat the loss of 13. That's a massive beat. So they came in positive. They came in profitable for this quarter after where the expectations were a loss of 13 cents per share. Sales came in at 5.2 billion versus the 4.29 billion estimated as well. So absolutely smashed earnings, guys. Really nice earnings beat from Open Door. Wow. This is one of those Chamath SPACs, if you guys recall. Virgin Galactic was also one of those, but Open Door was definitely, I believe this one was, I think one of the third SPACs he took public, if I'm not mistaken. But anyhow, it's now up 14.5% on some really rock star numbers here. They see revenue going up 4.1 billion to 4.3 billion versus a 3.93 estimate. So a beat on guidance as well. That's really great. Open Door, guys, looks like a really good beat here and really nice looking numbers. Nice outlook. Ticks all the boxes here, guys. Open Door up 14.33%. Really nice move out of them. Okay. Still waiting on Block, aka Square. Block Inc. is now up 9.33%. Let's take a look at those numbers. Really nice move on that. That stock is still moving up 9 1/3. So they came in earnings per share 18 cents. They missed expectations of 21 cents. So the expectation was 21 cents per share, but they actually came in at 18. Revenue of 3.96 billion. They also missed on revenue that was expected around 4.14. Stocks up considerably here, though. I wonder if this has anything to do with perhaps guidance numbers. Something is creating the buying here, because earnings numbers look pretty bad. They missed on earnings. They also missed on revenue, yet the stock is up. That usually only means one thing, and that's guidance. Let's see here. It's one of those things, guys, that just because the stock misses earnings doesn't mean it automatically goes down. Afterpay growth. Let's see here. So some interesting numbers from their earnings report. So Block on the report, Q1 2022, the year-over-year growth for Afterpay, which they bought, was up 50%. So that is the buy now, pay later platform that competes with like an Affirm. So pretty solid beat there. So maybe this has a lot to do with some of the growth that they're seeing. Profits up 41% year over year. Interesting. Okay. We'll see if this lasts, because they missed pretty badly on earnings per share and on revenue as well. I mean, it wasn't even close for revenue. Interesting move there. So Zillow came in and missed earnings and announced a $1 billion buyback, but nobody's buying it. It's now down 7.5%. Wow. Anything on Cloudflare yet? Let's take a look. I hadn't seen any movement on them last I checked, but let's go ahead and take a look at Cloudflare. It is starting to move down here now. It's down around 4% after being down 14% on the day. things just keep getting worse for some of these stocks, guys. Let's take a look at Cloudflare's numbers. So a couple interesting numbers here. They actually beat. So expected earnings per share was $0. They came in at 1 cent. So profitable. Revenue of 212.2 million. And they beat by 6.54. The expected revenue for Cloudflare was 205, and then they came in at 212. So they beat on revenue. They beat on earnings per share. First quarter total revenue total $212 million, representing an increase of 54% year over year. Pretty decent compared to last year. Record dollar-based and net retention of 127%, representing an increase of 400 basis points year over year. Interesting to see that the stock is red. I think this is actually pretty darn good. I don't know what their guidance is, but let's take a look. I'm looking a little bit further here. Guidance. They're expecting total revenue of 226 to 227 million for fiscal year 2022. I don't know what the expectation was for that. I have to go back and check. But this actually doesn't look too bad. I'm not quite sure what the selling is for. Up, see, we're seeing this bounce. This is starting to make a little bit more sense. I think people are digesting this a little bit. Yeah, they beat on guidance. The guidance was 218 million, 226.5 to 227. So they beat on that. They affirm, so reiterated their earnings per share of 3 to 4 cents for 2022. Raised their yearly revenue to nearly $1 billion, 955 to 959. They beat that estimate as well. Lots to like here about Cloudflare, guys. I'm not quite sure why there was the initial sell-off. I like Cloudflare here. I like it. It's a tiny little company, and maybe that's why. But I like it. I like it. I like it here. I don't hate it at all. All right, let's check back in with some of these other ones. So Block, aka Square. This throws me off so bad. You know, the ticker is still SQ when it was called Square, but they call it Block. They keep the ticker. So if you hear me call it Square, just know that I'm calling it that it's Block. Nevertheless, the stock's still up. It's given back a significant amount of its gains. I didn't really understand the initial run up here, other than the fact that there was a lot of short interest on Square. But it is starting to sell off now. They actually missed on earnings per share. They also missed on revenue. Nothing really looked good on these earnings on the surface, and it looks as if the stock is starting to give back some of those gains. So Mercado Libre also was, what is Mercado Libre? Here we go, Melly. Yeah. Mercado Libre, one of the e-commerce plays. E-commerce has taken an absolute beating. We saw that from Shopify this morning. We saw that with Etsy last night. We've seen it from Amazon last week. I mean, it's just been absolutely atrocious. But here is Mercado Libre coming in, another e-commerce play. This is kind of the equivalent of Amazon for South America. So just think of it that way. Let's take a look at those numbers. It came in. Estimated earnings per share were $1.36. So they missed. Coming in, the actual was $1.30. Revenue came in at $2.2 billion. They beat the $2.02 billion estimate. So they beat on revenue, missed on earnings per share. This, to me, just continues to be the theme with a lot of these companies. Of course, they're going to come in with higher revenue because they're able to raise their prices as consumers come in. But the problem comes here with how it affects their bottom line because of the associated costs. Some of these companies aren't able to pass all of the costs onto the consumer. And while they're bringing in more revenue, they just can't keep up with earnings. And so this is just going to continue to be a theme. The stock is up 5.5%. So I wonder if it's probably because of guidance, perhaps, or maybe it's just not as bad as some of the other ones. I'm not sure. But the stock is up pretty decently right now. It's now sitting at $967 per share after closing the day at $913. It was down 11%. So it hasn't even begun to give back any of its losses that incurred just from yesterday. So we'll see where this goes. While it's up 6% here, it's not exactly great news, right? But at least it's green. It's better than some of the other ones that are continuing to sell off. Okay. PLYA. Let's see here. Playa Hotels. No surprise here. This is up 6 1/3%. just continuing to play along with the theme. We saw Marriott, we saw Hilton, Airbnb, Booking, Expedia, and here you have Playa Hotels. PLYA is the ticker symbol. They came in, so estimated earnings per share for PLYA. Let's see here. Estimated earnings per share was at 11 cents, $192.92 million in revenue. Looking to find the actual earnings per share. Don't have them just yet. If Gerardo, good Lord, dude. I got you, bro. Where is do you have anything, Raylan, on Raylan? Can you find me the numbers on Playa Hotels, please? I'll go ahead and cover Yelp. I appreciate you. Yelp came in. They also had earnings as well today. God, I told you guys, it was just like a plethora of earnings that came out today. Yelp came in. They beat a loss of 1 cent versus a loss of 9 cents. Estimated sales are at 276. I'm sorry, sales actual was 276.63 million. They beat the 266. Stock's really non-reactive right now, but this is actually one that doesn't really react to much of anything. Super low volume. I'm sure that this will probably jump in the after or tomorrow morning when the market opens back up. Okay, I appreciate you. I've been looking too. I don't see anything, but it looks like Playa's moving up. Looks like looking at Playa. Nope. Thought I had it. I do not. So I have something here from them. You keep looking, Rhea. Raylan. Okay, so we have some numbers from Playa Hotels. Net income was 42.7 million compared to a net loss of 69.7. So that's actually really good. Adjusted net income was 31.8 million compared to adjusted net loss of 50.9 in 2021. Another great move here. Net package. The interesting thing here is I would want to see how Playa Hotels did compared to 2019. Like, of course, the comps are going to be good compared to last year just because things were still in the middle of trying to reopen. So no surprise to see the massive beats compared to last year. So that's great and everything. But what do they look like compared to 2019? And I think that that's going to be something that we'll probably hear from them on their earnings call. So it looks like they have a relatively decent beat. So Dropbox did have earnings as well. And I know that Raylan put those out. I'm going to scroll back up to see if I can find those. Dropbox is up 3%. All right. I'm just going to have to start. Listen, guys, quit spamming the chat, will you? I've covered all of these. So just chill. I will cover them. If I haven't done so already, chances are I have. I've already covered a ton. So I'm scrolling back through to try to find Dropbox. Boy, there's a lot of earnings in here today, guys. There we go. Dropbox estimated earnings per share. They beat the estimates. 37 cents was the estimate. They beat and came in at 38. Sales came in at 562 million and beat the 558 estimate. So pretty decent beat on Dropbox. The stock is actually up 3%, but still hasn't really given back. Still hasn't taken back the losses. I mean, today the stock was down 5%. It's only up 2% now. So if you bought it today, you're still red. Unfortunately, stock's still not really back to where it should be. Okay. Checking in on GoPro. That's another one. How many of you here in the chat got GoPro as a free stock because you went and set up a Robinhood account? Was this your free stock or what? GoPro has no move on it at all, so no movement there. It's flat on the day. The stock never goes anywhere. Looks like they're actually pretty good, to be honest with you. So earnings came out for GoPro. I take back my previous statement. 9 cents actual. The actual earnings per share, 9 cents versus a 3-cent estimate. Revenue came in at 217 million, which is in line with estimates. So not bad. They actually crushed earnings there. GoPro, a rare beat. Oh, no shit. Shock City Rocker got Apple. He's one of the lucky ones. One of the lucky ones there. Okay. MP Materials is up right now. MP Materials. He came in and beat. Holy shit balls. Wow. MP Materials came in with an actual earnings per share of 50 cents. The expectation was 41. So nearly a 20% beat. 20% beat on revenue, and 166.26 million. They beat by 33 million on revenue as well. So really solid beat there. The stock is up 3%, just barely taking back those losses for today. The MP was trading down 2% is where it closed at. It's now up 3%. So just barely green. If you bought it today, you're actually made a little bit of money. But still just a pretty interesting movement on this. Guys, as you're rolling in here, make sure you hit that thumbs up. I certainly would appreciate the support. Thanks so much for tuning in. I've covered a shit ton of earnings today. So if you haven't heard me talk about it and you're just coming in later in the stream, chances are I've already covered it. So let me know if there's ones that I haven't covered for those of you who've been watching since the beginning. But if you're enjoying the stream so far, if you think I'm doing a good job, make sure you hit that thumbs up. I certainly would appreciate it. There's 260 of you guys in here and only 72 likes. So I think that we can do better than that. So hit that thumbs up if you wouldn't, if you don't mind, I certainly would appreciate it. And also we're coming up towards our new segment, over under. So make sure you guys are throwing in your over under stocks, the stocks that you want me to evaluate as to whether or not I think they're overvalued or undervalued. So in the chat, put over under and the ticker symbol, and I'll go ahead and give my 2 cents on whether or not I think your stock is undervalued or overvalued. Mercado Libre reported earnings earlier. Actually came in and did okay on earnings. The stock is up now 5%. Very interesting. MP was a SPAC too. They all are duped. Yeah, the couple of SPACs that actually did well. So one of them was MP Materials. The other one, Open Door. That one, Open Door. Open Door did really well, up 13% still. They actually crushed earnings. One of the few real estate, or I guess real estate tech companies, Open Door, Redfin, Zillow, they're all like real estate tech. I don't know what the proper term for that is, but they're all real estate tech. They all reported today. Redfin and Zillow are actually shitting the bed still after having terrible days to begin with, whereas Open Door is actually took back all of its losses and is actually in the green. It's up 13.5% here after hours. Actually doing really good. Another SPAC play that actually isn't doing so bad. Okay, so covered a lot of stuff. I did cover Fubo TV missed earnings badly. Again, stock's down around 6% after already being down 10% on the day. Absolutely atrocious. I'll recap a couple of these. Virgin Galactic came in, missed on earnings per share. They came in at a loss of 36 cents. The expectation was a loss of 32. They actually beat on revenue by double. So, but it's not saying much considering the expectation was only $120,000 in revenue. So there you have it as far as that's concerned. Playa Hotels didn't really have the actual earnings per share, but it looks like they did really well compared to last year. The real question here is how are they comparing to 2019 numbers? That's where a lot of these hotels are starting to compare themselves to. And so right now it's doing well. We'll see where it does tomorrow as earnings kind of get digested there. A couple other ones. DoorDash came in and actually missed earnings per share. They also missed revenue. Stock's up. I'm sorry. I take that back. They beat earnings. They did really well. The stock's up 11.5% after being down 10.5%. So they actually recouped their losses as well. This is doing pretty good, pretty decent. The one that actually missed earnings per share and missed revenue was Block. That stock was up around 12% and actually has given back its gains as well. It's now only up around 1.5% after being down 10.5% today. So, not great, right? Even though it's up after hours, it's still not a great move. Interesting. Okay. So good stuff, guys. Thanks so much for all the engagement here. I'm seeing so much. So let's go ahead and do some over-unders. How about we do that? I see a lot of you guys putting them in here. If you want to, go ahead and keep putting those in. I'm going to scroll back up to the top of the list here to see how many people put this in early, and I'll certainly cover some of the other ones. But make sure you're putting over under in the chat and your favorite stock that you would like me to evaluate as to whether or not I think it's overvalued or undervalued. Interesting one. Jonathan Schreiber puts love on here. This is Love Sack. How well are the $15,000 couches doing, actually? So the stock's not doing all that great. Hasn't done well. Really, the highs that we saw were back in June of last year. So nearly a year since we saw this trading at $95. It's now been cut in half, by more than half. So is it undervalued or overvalued? Let's take a look at the forward PE. It's trading at 15 times next year's earnings. So not bad. It's not expensive at all. But where is this going from here? Consumer demand has really kind of dropped off when it comes to buying things for the home, right, Jonathan? I mean, this was in such high demand when people were at home refurnishing their homes, redesigning their homes, and that sort of thing. And so we've seen demand really kind of fall off a cliff. We saw that from Restoration Hardware. We even saw that from Home Depot and Lowe's. Wayfair's also in that category. Can Lovesac start to make a turnaround? I'm not quite sure just yet. I think that right now, I'm not going to sit here and tell you that it's overvalued because I don't think it's overvalued. I don't think it's undervalued yet. And then that's kind of where I'm at with it. So Love, certainly one to keep your eye on, keep it on your radar, but I don't think it's ready to be bought up just yet, even though it's only trading at 15 times next year's earnings. I'm going to say that it's neither. It's right in the middle. So a couple really good ones that I'm seeing come in here, guys. Thanks for that one. Okay. I'm looking for over, under. I'd love to. I was going to ask how you guys are loving the segment, but based off of the engagement here, I'd be willing to say that you guys are loving it so far. So I'm going to continue to keep this. This might be a sponsored segment at one point, just given the reactions that I'm getting from you guys. I appreciate it. Over under on Baba, says Rolf Haber. So Alibaba, Chinese stocks obviously have been absolutely just crushed. Alibaba was trading at $319 per share on October of 2020, and it has given back over 60%, nearly 70%. The lows are at $73.28. That just took place March 16th of this year. It has clawed its way back to a certain extent. We've heard some news from the Chinese government that perhaps they would be lightening up on some of their regulations, but they can never really be trusted. If we're just looking at the forward PE, though, it's trading at just 12 times next year's earnings. This is the Amazon of the Asian market. I mean, absolutely amazing company. This is undervalued. Absolutely undervalued. The only risk here, and it's a serious risk, is the Chinese government. We take the Chinese government out of it. It is an undervalued stock all day long. Yes, I think it's worth owning. No, I don't think that it should take up a majority of your portfolio, but I do think it's worth scooping up here. It's undervalued. Alibaba. Etsy, over under from Tony. So Etsy came out with earnings last night. We reacted to those in yesterday's stream, and they didn't do well. Not surprisingly, right? They had 52-week lows today. The stock was trading at $307 per share on November of 2021, and it is trading at $90 today. Closed the day at $90. That is absolutely wild. Since November, it's dropped 60% of its value. Next year's earnings are at 27 times, so we're getting there. I still think it's slightly overvalued. I'm not going to sit here and say that it's as overvalued as something like a Shopify, which we'll talk about. I still a lot of you guys asking about Shopify, so I'll just go ahead and cover that real quick. But it's undervalued when you compare it to its counterparts, such as Amazon and Shopify. But Etsy, still overvalued. I still think that we could see some more of this, give some of its multiple back still. I would say maybe it starts to become undervalued around $76. So I do think we still have some room to go down. Shopify came in. It absolutely tanked today, down 15%. They had horrible earnings. They weren't great. The CEO wants to take up more controlling share of the company. Nobody was talking about that. I think that Shopify is still overvalued, despite the fact that it is down from 1762 that we just saw in November of last year, and now trading at $400 per share. Came down and touched 395 today. I think that I would start to say that this is undervalued when it comes back down to maybe the 300s. I'm looking at maybe 290. And I know that sounds crazy, but we look at the multiple here, and it's still trading at 124 times next year's earnings. Now, this is a growth stock, and growth stocks will still do well in an environment like this, and especially something like Shopify, who's continuing to make money, but the growth has slowed significantly. People are just continuing to go back out, and they want to actually try on clothes. They want to see the things that they're buying. And so this isn't to say that e-commerce is going away anytime soon, but when you have people that are cooped up and all they're able to do is buy things online, now they have the ability to go out and see and touch things that they want to purchase. So I think that while there's still growth potential here, that it just pulled forward so much of its multiple that this is still overvalued, in my opinion. So there's still more downside here for Shopify. I think that I would wait. Moderna, undervalued or overvalued? I think Moderna mRNA has come down from $500 highs, $497.49 that we saw in August of last year. So in the last 9 months, it's given back 75% of its gains. It's trading at $142 per share. It's what it closed at today. Next year's earnings has a forward PE of 5 times next year's earnings. That's stupid low. My problem here is that Moderna has no moat. It's COVID or nothing for them as far as vaccines are concerned. And once that moat dries up, what else do they have? Nothing. I mean, they really have nothing. And so for me, I still think it's overvalued. You can make the argument that the forward PE makes it so that it's undervalued, and I could see that, but I just don't see how this gets back to that $500 level anytime soon. And I don't even think it gets back to half of that, which would be $250 anytime soon. I'm going to go ahead and say that this is still overvalued. I could see this coming back down to around $120 a share, and I think that could be a tradable event for Moderna. Great question, or great stock to put in. I love this one. Go Viral says the whole market under over. So let's just take a look at the SPY right now. The S&P 500 ETF, the S&P is trading at around 18 times next year's earnings. That's a reasonable PE. When we look at where this was trading at just a year ago, it was trading at like 24 times next year's earnings, which some may argue was a little bit too hot. And I would say that you were probably right on that. But I think that the S&P belongs somewhere between 20 to 21 times next year's earnings. And so therefore, I do think that this is undervalued. The economy is extremely strong. We're seeing some really good earnings despite what we saw out of today. And, you know, the big companies, your Microsoft's absolutely crushed earnings. And companies like Microsoft and even Apple to a certain extent, ones that are heavily focused on the cloud, those are deflationary type stocks. Those are deflationary companies that create deflation. And so that, to me, when we see those companies continuing to grow significantly, they're also attacking inflation. And so for that reason, I think that they will carry the market and continue to hold the market up as some of these other companies start to get re-rated, which I think is happening. And I really like the market right now. I think I've said this before. I still feel bullish second half of the year. So I'm going to go say undervalued. The overall market is undervalued. Buy it up. Let's see what else we got. A couple other people. Please smash the like button. I like that. Over under on snow. Great question, or great stock. Let's take a look at this, because this is one of those ones that I think a lot of people are just really scratching their head as to why this was trading at $405 a share, and it's starting to look attractive at 162, right? Well, let's take a look at this. So this stock is trading at 1,000 times next year's earnings, 1,000, and it's not making any money. They're still reporting losses. This is crazy, right? I mean, yes, it's come down considerably, 75% from its highs, and it's still downtrending, which is crazy. And so when does this start to become valuable again? I think the real question is when they become profitable. Now they have earnings that are coming up towards the end of the month. Their estimated earnings per share are at 1 cent. If they do come in profitable, then Snowflake will probably go off despite the multiple. I do think that this is still overvalued. I do think that this has more room to fall to the downside. It hit all-time lows today. So for me, I think it's still overvalued. I will say that at some point this is going to be a buy. It's just not right now. I do like the company. I just don't like it here and now. Okay. Over under on Coinbase. Let's take another one. Look at Coinbase. I like this one. Take a look. Bitcoin took an absolute beating. The unfortunate part about Coinbase is that it just follows the price of Bitcoin, even though it doesn't follow the actual fundamentals here. This is trading at 100 times next year's earnings, so it is expensive. But when you consider the growth here, I think it's reasonably valued. I'm just going to say that it's reasonably valued. It's not undervalued. It's not overvalued. And it's coming to a point where we could potentially have seen a bottom at $111 per share. I wouldn't be running or rushing to buy this one up, but I would say that it's getting to a point where I would say it's reasonably valued, but not undervalued. And there you have it, guys. That is your over under for the day. Good stuff here. I'm going to have to figure out. I'm really shocked at the way that this has been received. So I certainly appreciate it, guys. It was an absolutely crazy day today. Real quick, Tammy, yes, Penn National had earnings today. They were actually really good. They came in and missed on earnings per share, but revenue was at a record high, and they see a path to profitability in their sports betting field, which nobody else in this space can say. DraftKings can't say it. Caesars can't say it. Nobody can, not even MGM. So I think that Penn is set up to do extremely well within the next 12 months. And we can see this actually start to move to the upside, maybe by the end of this year. I still like Penn. I'm still passionate about Penn National and Barstool and everything that they have going on. I think they're the best in the biz in the way that they're handling things. And so it's just going to take some time. That being said, I'll be back on Sunday, 7:30 p.m. Eastern time to go over Stock Watch Sunday. It is Mother's Day, but I'll be here. And go out and buy your mom something good. Also, tomorrow is Nurses Day. It's Teachers Week as well. Make sure that you show some love to the nurses and teachers in your life, guys. That's going to do it for me. I'll be back on Stock Watch Sunday to give you guys my overview on the week ahead. Make sure you're tuning into that. It'll be at 7:30 p.m. Eastern time. Hit the subscribe button. Hit the notification bell to get notified when I go live. And then hit that join button next to subscribe to get your watch list from me. It's $4.99 a month. You get access to our Discord group. You get access to all kinds of other good stuff. It's a great value. It just helps me out, helps support the channel and the studio you see behind you. And that's going to do it for me. Thanks so much for your support. It's been great, guys. Have a great night and have a great weekend.